guys that own the market.
So that's the first question then.
You know,
Are the
that is a
markets
big one.
are the markets manipulated?
Yeah, in my opinion, at least.
Yeah.
Hey guys, how are you doing? Another episode of A Trader Over the Shoulder. Like always, Alex and I will be your host for this episode. Today we are going to talk about one of my favorite topics, at least. And before we will start, obviously, if you didn't follow yet, please go ahead and subscribe. You can watch us on YouTube, sitting on a sofa, or just listen through Spotify and
Yep.
the rest of the podcast system. So, yeah,
Let's go. We're actually talking about manipulation.
yes.
Actually, I quite like talking about this as well because it makes me feel like I wouldn't say a game I wouldn't say trading's a game, but it is kind of a game. But manipulation is just a big part of the game. You know, you against the other person kind of thing.
Yeah, definitely. And, manipulation is what moves the market. This is the main thing. Most people, they saying the prices are randoms and stuff like that. There's nothing random in the market. There is nothing random in the market. Everything is calculated. Everything is priced, well known before. All the movements, all the waves, the trends, all of that built from scratch with the guys that own the market.
So that's the first question then.
That is a big one.
Are the markets manipulated?
Yeah, in my opinion, at least.
Yeah.
Yeah, definitely. I've seen it throughout this 15, 16 years.
Yep.
You see it in day trading, you see it in swing trading, long-term investing. You see it everywhere. You see, we need to understand who is the manipulated system or person or
How
whatever.
as
but,
well? Yeah. There's.
we'll talk about that today. So if you like manipulation, and definitely stick around till the end.
Exactly. So, what kinds of forms of manipulation are there, do you reckon?
Okay, that's a good one. I mean, when we're talking about the market.
Yeah,
right?
we're talking about the markets.
Yeah, not in real life. Because
Also, it's kind of the same type of things. Though. It's like social science in a way. Like how they actually manipulate the markets is very similar to how you would manipulate many other things, and social dynamics and the way they do that is very interesting, to be honest.
Yeah, definitely. I mean, the thing about manipulation is basically, let's talk about it from the beginning. What does it mean? It means that you creating a scenario or you building a story so you can react and do one thing while the other person or the other company or whatever, they believe, because you led them to believe that they should act in a different way. So that's the main thing about it.
Yeah.
So you tell him, let's take, COVID, right? So you take COVID, you build up a story, and you let the public believe that this is something that they need to do.
So it's like a catalyst to make let's say a certain move. The catalyst for that move was something, like COVID or many other things as well. And then they use that to obviously make their own story so they can move the market in a certain direction.
Yeah, in anything we do in life, there is, in any market, there is one that's selling, the other one is buying. The first one is buying, the other one is selling. So you gotta do something in order to make the other side act. Simply as that.
So who are the people who manipulate the markets? Because you could just be one person with a lot of buying power. Could you move the market that way, or do you have to be somebody with who moves the market? So who manipulates the markets the most?
If you have a lot of money, you can do that. Depends on which
asset.
Asset you're trading. But when we're talking about real manipulation, the market manipulation is definitely the big guys. We're talking about smart money, so it's banks, hedge funds, portfolio managers, all of those big money pocket that basically controlling the price, controlling the movement of the price, and they need to buy billions of shares, right? So you can't really go ahead and just click on the button. Market billion shares. It doesn't work like this. So what you need to do is create an opportunity for the other side to believe that now they need to sell, and when they sell, they can buy from them, right? This is how support and resistance work.
Yep.
This is a major demand or supply area, and the one side believe it should continue to the downside, the other one is buying all the sales that the one side created.
It's like when I'm trading crypto and I see like a nice range that has been, ranging for, let's say, a day or two, and then suddenly it starts breaking, price starts breaking the range, and you see a lot of buyers or sellers coming in. And then what happens? They're just liquidity for all of these big players that are just getting into the market. So let's say if it was breaking up to the top side, suddenly you'd see a lot of orders and price just coming back into the range, and they've just basically filled all of those orders for those bigger players normally, no?
Yeah, definitely. This is exactly how it works. So when we're looking at the bigger picture, we will drill down in a second for like
the
a
trading
1 minute,
and stuff,
like the trading, the 1 minute chart, the market makers, manipulations, spoofing, and all of that.
Yeah.
But when we're looking at the bigger picture, you can easily see throughout the history that the market being manipulated consistently every single time where the big player wants to make a move. You can see it. I mean, I made some videos on it in 2015. When I watched the charts and the news and told the guys before that what will happen. For example, let's take JP Morgan or whatever. They need to buy, as we said, like billion shares. Right?
Yep.
Or the whole industry combined want to make a move, strong move. So they will use what they own. What are the the big guys that have the richest guys in the world, right? What are they owning?
Real estate, they're all businesses. To be honest, I think a lot of people now are holding attention. So when I mean by that, I'm talking about like news, publications, things like that.
The news.
The
guy from Amazon.
Yeah.
Right? Yeah. The owner of Amazon.
Yeah.
He owns the...
is it a Washington Post? Is it Washington Post?
Yeah. Washington or the Times or something. One of those.
Elon Musk trying to buy Twitter.
Yeah. Donald Trump tried to buy, create a new channel, like his own channel. The news, JP Morgan at the time, I mean, like the real JP Morgan.
Yeah.
Those guys know that if they will have the news,
the attention of the people,
the attention of the people, they will have the public in their hands. Now, if I want to buy a billion shares, and I can't, like we said, I can't hit the market button. I need someone to sell those billion shares, right? So all I gotta do is create an illusion, a story that something is wrong, and those guys, the public, us, what they call the dumb money, will sell their shares, and then you can buy it from them, right? And 2008, it was the same at the bottom when SPY, the ETF for the S&P 500, it was 67. Like a month before that, you can see that the news. I lived in the U.S. at that time, and you can see that the news were much aggressive to the downside, and very negative, very, very negative, all over the news, papers and TV. Okay, and they didn't tell us, sell at the top at the end of 07. They didn't tell us that.
They were buy probably.
Exactly, and at the end of 08, the beginning of 09, They told us sell everything because the market gonna collapse. And that was after it already started. Yeah. So if I'm a guy, from I don't know, South Carolina, and I don't really understand about the market, and I do have like $100,000 in it, and I see all over the news that they're telling me to sell, so all I gotta do is pick up the phone from my broker and tell him, or my bank, and tell him, sell everything, right? And then
it goes
JP
up.
Morgan say, thank you very much for the shares, and it goes up. And we saw it also in 2016. Most people thought that the price of the market was a bit extended, and they thought that the price should drop down again because there've been 8 years.
Consecutively.
There was a crisis in 2000, the dot-com, and then 8 years later, the subprime, and then most people thought, okay, another 8 years, the price should drop down. There was a head and shoulder at the top, super nice head and shoulder at the top.
That everybody saw it was a head and shoulder.
Exactly. And you can see all over the news here in Israel and also, worldwide. You can see that JP Morgan is saying the price should drop down. Deutsche Bank saying the price will go down. Ron, this is like a major crisis coming in, and all of those bullshits. And basically, the price broke the neckline of the head and shoulder, right? It was a weekly chart, a weekly bar. So it broke down. Most people just sold into the break. And
straight
then,
back up.
Yeah. I mean, up until this day. So you see it all over. And right now, we're dropping.
The S&P was just the same. I think it was a few weeks ago I thought I was the smartest guy, the first one to find the reverse head and shoulders on the S&P. I sent Miki a lovely drawing that I did, and I was like, this looks good for the upside. And it was literally just the opposite. It went up, probably got all of those traders interested for the upside, and then just straight back down.
That was like a double manipulation, because the head and shoulder. You're talking about the reverse.
Yeah, the reverse head and shoulders.
Okay.
Yeah.
So, it's been manipulated every single moment, every single day. The market, it couldn't work otherwise,
But the only way to manipulate. Okay, so you've got many things of manipulation. You've got manipulation in the news, manipulation in social media, tons of different types. You've also got manipulation on the chart of price, and who can actually design or manipulate the price and the feed that we're all seeing. It's normally market makers, no?
Yeah, definitely market makers. That's their job.
That's their job, is to make the market, but also
create liquidity.
Yeah.
But at the end, they are trading for themselves or for other companies that just paying them to do so. And the only thing they need to do is buy 500,000 shares of ABC, and they need to do it in the best way possible. So they gotta manipulate the price. So they creating the
patterns.
The pattern, the head and shoulder, or the bull flag, or whatever. You see a beautiful bull flag. You just finish, trading school, a course. You took a course.
Baby pips.
Something like that. And they told you that when you have a bull flag, you need to buy the break, right? But at the end, market makers obviously know that, and what they will do, they will push the price up, drop it majorly to the downside, so taking all the stop losses at the bottom of the consolidation of a flag, and then we'll shoot the price up again. And that's called a shakeout, basically. So there are a lot of techniques to first understand if there is a possibility that they will play with that specifically bull flag, but also after they shake you out, in case you did, then you need to jump in again. The percentage of success of this trade is like 90.
Yeah. Well, after
the shakeout, I didn't see any time that I saw a shakeout. I didn't see a shakeout that didn't work, for my favor.
So what would be the techniques then? How do you kind of spot manipulation, or how can you, as a trader that you've got into the markets, you're seeing different types of shakeouts or very choppy markets. What do you do to mitigate that, and what do you do to actually benefit and capitalize on that stuff as well?
Yeah, I mean, first of all, my best strategy that I'm working with, I call it smart money manipulation, because it's literally that. I'm looking for a drop in the price, a trend, a strong trend to the downside, for example, reaching a major support level, creating,
huge amounts of volume.
Volume, create MACD deviation, stuff like that. And one of the things you want to keep your eyes on is the price action reaching that support level. Okay, so for example, what they will do, they will get closer. Let's say this is a major support level. In case you are just listening in Spotify, maybe go ahead and check it out also later on YouTube, just so you can see my hands when I'm trying to draw a support level. But imagine I'm putting a support level, so the price getting closer to that support level, they will create that bear flag, sorry, and then the bear flag will break, right? A lot of volume will come in. Most of them are basically sellers that saying, wow, that's a bear flag, let's get in. And then from the other side, a lot of sells, so a lot of buys, right? And then they create a huge volume on the support level, and from that point, turning the price up.
It's funny because you always see that happening on major, swing points as well. If you look to the left on the chart, suddenly you see that's a major kind of swing point. That's a place where like a major pivot point, or whatever you want to call it, swing point, pivot point, and it's hard when you're in a trade and you see those kind of patterns and your success rate with those patterns. It's very easily to kind of sell into support or buy into resistance when you're in the trade, and you've got to kind of pull yourself back and say, no, it's not the best kind of trade doing that. And I think that's when it comes with your experience as well. As a more experienced trader, how much markets are manipulated, and they try and get you to let's say buy into resistance or sell at support and stuff like that. So
yeah, I mean, just always think from the other side. When you're trading, don't think about yourself. Think about the guy that manipulating you to build you a scenario to tell your story that you will fall into. So always think about the market maker that controlling the asset that you're trading. So I guess that could help just to understand when, or is there a possibility, or what's the probability of manipulation in this specific place or pattern that you're watching right now. Yeah.
Smart money, dumb money. What do you mean by smart money, dumb money?
Yeah, so smart money, as we said, banks, hedge funds, institutionals, big money, Warren Buffett style. That's the smart money. The dumb money, it's us.
Just the retail.
Retails, simple, even lower level.
Institutional traders.
No, I'm talking about like public. Just the normal Joe.
Yeah.
So those kind of things, because it's easier to sell them the story, because they're not involved. They don't know about the manipulation, and they're not too involved. Maybe they're not even watching charts. But if you sit home, my parents, 70 years old, they sit at home, they're watching news. They're telling them that whatever, COVID is a bad thing, and then they go ahead and buy the whatever things that they're selling.
I remember when Bitcoin was pumping, it was at one of its higher points, and we were sitting at the table at my mother's house in the UK, and my grandma says, Alex, you're investing in this Bitcoin stuff? And I'm like, okay, that's a sign, we're at the top. Sell everything. Exactly. If your grandma is talking about Bitcoin or talking about, I don't know, investing in Tesla or something crazy that grandmas shouldn't really be talking about, it is a good sign to get out.
Definitely. For the charts, just go to your grand.
Yeah.
Does she know about stock market?
Oh. But that was funny. I think after that, you know.
Yeah, there's a famous phrase saying if the taxi driver is telling you to buy stock, then you need to sell, or the opposite. Yeah.
Yeah, because they keep hearing about it. I guess.
Exactly. So they listening to a lot of people every day. So if all of those guys are talking about selling or buying, that means that the price is being manipulated. And you know, this manipulation didn't occur only this last few years, right? It's from the beginning of mankind, literally, because you know, we have those emotions of fear, greed, hope, those kind of things. You know, the ego that comes into play, the trading part, like what it's called, merchant. Merchant. Yeah. So.
It's like it's like marketing. It's like sales. You know, old school. You know, I think the world has come to a place where courses are all over YouTube and all over the place. But courses have been around for ages, for donkey's years. You know, you had back in a day, you had people still selling courses and still doing their own kind of marketing in newspapers or on the town square, and the same kind of techniques. To be honest, are being used today just in a digital type of way. And it's
100%. Yeah.
I think humans are humans, and the way you can manipulate humans through emotion and through stories is the exact same that marketers do it, to salespeople can do it, to obviously goes into trading as well. That's why I think many things that we do in trading and that we learn, discipline, all of these different things, they have knock-on effects into our day-to-day lives as well, into how we react day-to-day lives. But
so this is why Steve Jobs said, you know, the life that you live right now, just created by other people that are probably not smarter than you. You know, so you basically living a life in a box that was designed for you, right? Schools were designed for you, not to become an independent, but to become a guy that in the system, strict rules, you know, follow rules and all of those. I'm not saying it's a bad thing or a good thing. I'm just saying this is what they build schools for, right? So did you know that cannabis, marijuana, was legal like 500 years ago all over the world? But then came J.P. Morgan, Rockefeller, those guys, and it started to interfere with their business, printing a newspaper.
Why were they using hemp? Or?
Yeah, they wanted to. Some other guys, don't recall exactly, but wanted to switch and use that hemp, and it was affecting their business. So, you know, if you go to YouTube, you can easily find commercials back then saying when you smoke cannabis or when you're using cannabis in all kind of ways, it's building a demon, or you know, a demon controlling you or stuff like that. And you see a kid lying on the floor and forgot the name in English, but the guy, you know, trying to
like an Exodus kind of thing. Exactly. Oh, really? You can see that?
Yeah,
wow, that's
on
crazy.
YouTube, I saw it. Cigarettes, right?
Cigarettes, I think in the UK anyway, you could have a doctor that would prescribe you cigarettes to getting better.
You can see the commercials at least in the USA side. You can see the commercials in the 70s where a doctor is telling you, hey, I'm smoking Camel. This Camel is great for you. Cigarettes are perfect. You can enjoy it while you're working, after lunch or whatever. And now we know cigarettes are
really bad, huh?
Yeah. So the only thing is manipulation. Every market has a manipulation. You want to sell this glass if you are a bad person, and yes, those guys are not a good person. You will tell them that this glass will make them free or whatever.
It's like a magical glass.
Yeah. The public will buy your story if you know how to sell it, and we got a market.
I reckon Elon Musk is probably at the moment anyway, one of the best kind of manipulators in the market at the moment.
Yeah, there was maybe a year ago, 2 years ago, SIGL, something like that. Stock that was like $1 or 50 cents, maybe 15, and it just came. It just tweeted that this company will be the next Telegram, right? Instead of WhatsApp or something like that. In a minute, you saw the price going all the way up like 1,500%, like in 5 minutes.
Crazy.
Just, and I mean, super easy to manipulate. Donald Trump, in his good years, he said something about how the oil is going up or down or whatever. Boom, prices are moving ridiculously strong.
Yeah. No, I remember Elon Musk would tweet something, probably hashtag Doge, or put like a picture of just like a dog, and suddenly in a matter of like minutes, you would see like somebody making a crypto token with everything that he says, and these things would shoot up thousands of %,
Yeah.
And if you're quick, you can. I got a friend called Luke. Shout out Luke. Luke used to love all of that stuff. He used to just follow Elon Musk, and anytime Elon Musk said anything about, I don't know, dog things like Floki coin or anything like that, he would just go in, buy the coin, and get out as well. And he made quite a lot of money by doing that. So Elon Musk, imagine the power you could have if you had Elon Musk's Twitter for a couple of hours.
Right.
Millionaires, huh?
Even
More than that. Yeah.
But you know what? The thing about Elon Musk in this case, it basically created, when he did those tweets, he built his own army, right? Because now your guy and some others, about
made
40
money
millions, made money off of it, watching every move that it does.
Yeah.
So when the next time, when he would like to manipulate it for his own good and tell them to buy, when he wants to sell, then he can use that to his advantage. And the banks also doing that. They will give you like 2 times the right headline, so you will believe that they are the guys to follow. But then, when they really want to manipulate the price,
it's what I think a lot of influencers as well, and especially social media, with things like new things like NFTs or crypto coins and things like that. Even they're using their social exposure also to manipulate and get people to buy something, and then they just take all the liquidity as well. So it's not even just happening with the big banks and the big in the big leagues. Also, if you've got a few 100,000 followers these days, you can manipulate people into doing and buying whatever you want. It's kind of crazy, actually.
Yeah.
Kind of techniques. What would you say in your trading? I know you've got a couple of strategies. You've got the smart money strategy and things like that. How would somebody start developing techniques to go with, or how can they start to spot the smart money or the institutional traders? How can they spot it in the charts?
I mean, if you like the idea, as a trader, if you like the idea of manipulation and all of those things, then you can use it, at least the way that I've been using it, it's either through bull flags and bear flags or the smart money manipulation. So basically, I'm following a trade, I'm following a stock, for example, because I'm trading stocks mostly. So I'm looking for that bull flag. And then I try to understand, is there a possibility for that bull flag to be manipulated? So, for example, what I would look for is where the pattern is occurring right now. Is it at the bottom? Is it in the middle range, or at the top where the price was already extended? For example, most cases of manipulation, like shakeouts and stuff like that, will come when the price, not shakeouts, sorry, like the SMM, will come when the price is overextended. So the price the stock was trending up all the way, and then you see the bull flag. Now, a bull flag is a continuation pattern. And most people say, okay, I got a bull flag. It's a continuation pattern. It should continue higher. But it's already been extended too much. So there is no continuation for that. It's just been manipulated, right? You can watch the volume. Well, for those of you who don't know what a bull flag is, it's basically a move to the upside and then like a strong rally move to the upside, and then a consolidation. So if you look at the consolidation part, you can watch the volume. Most cases, if it will be a shakeout or stuff like that, like a manipulated part, you will see an increase in the volume while consolidating.
Yeah,
Okay?
that's a big no-no for me as well. If I see that, I'm not getting in at all on a bull flag.
So stop not getting in, but think of, okay, this is the manipulation part. How can I take advantage of it?
Okay.
Right?
Yeah.
So don't take the bull flag, right? But wait for the shakeout and then jump in. Or say, okay, that's a manipulation, so wait for the false break and then take it to the downside. So
Okay.
use it to your advantage.
Advantage instead of not getting in.
You said, I know it's a no-no, so let's make it a yes.
Yeah.
You know?
That's interesting because I normally wouldn't. I would always go on to like a flag pattern if it's got lower volume and it's consolidating a little bit on lower volume. That's the first tick, you know. Obviously, then we'll see where it goes from there. But that's how I would get in. That's one of the rules, is having it on lower volume. So if I saw a lot of volume, then I would just say I'm not going for it.
Yeah.
But you say wait to see the manipulation, wait to see the spikes of taking stop losses and things like that.
Yeah.
And then go
And then
with whatever
jump in.
way, jump in whatever way it goes.
So if it's in, if you see the shakeout, for example, the difference between the SMM and the shakeout of the bull flag is occurring when the bull flag is at the right place, right? And it will continue higher, but they will drop the price just to take your liquidity. So let's talk about that, and then talk about the SMM at the extended price. So you see the bull flag, is it in the right form, you know, at the right place? We didn't start momentum move yet, so just building it. And now you see volume, increased volume while consolidating, right? Let the price break through, then you watch the chart and you will see, if it is a shakeout, you will see a drop, a very fast drop in the move. It
looks like a shooting star a little bit, no?
Yeah, something like that, but also continue to the downside because the stop losses are below the consolidation. So, and then the price, most of the time, will stop either on the 20 EMA or the 50 EMA. If you see the prices dropping and stopping there, you can easily go back either from that point of the 20 EMA, 50 EMA, or when it will break through the consolidation again.
And this is on a 1 minute chart.
This is on a 1 minute, but you can easily watch it on a hourly chart as well, you know. I just like trading 1 minute.
1 minute.
Yeah. So this is a bull flag consolidation, or either a bear flag, the same thing. But when we're talking about the SMM, when the price is overextended and then you see a bull flag, this is the first red alert. The bull flag shouldn't be there. The price is overextended. And then you see that it's very close to a resistance level. And then you see that you have volume in the consolidation. And then it break through that. You're not getting in at first. You should see super high volume coming in when it break through the price, when it break through the resistance, the consolidation, and then go to the other side. Mean reversal, some would call it.
Yeah. Where would you say is the best places to put your stops?
First, don't put stop losses. No, I'm just kidding.
You're going to get into trouble with that.
Yeah,
Miki doesn't play stop losses. He rolls naked all over the place.
So
on the charts I'm talking about, yeah?
At home as well.
At home as well.
But if you do put your stop loss, and that's fine to put a stop loss as long as you have two things. First, you understand where to put them. And the other part, when putting stop losses, if you got out of the trade, but you still see that the price is okay, the price action is right, you just, they shook you out, but it's still right trade, so you gotta get in again. And most people don't get in again because they just suffered a loss.
A loss,
right?
yeah.
So if you put your stop loss, put it at the right place. If you got shook out, enter again if it still fits your criteria, the parameters of getting in. Are you comfortable?
Yeah, I'm just, sitting down all day.
Yeah.
Got a lot of stuff here. But for people that, again, where's the right place? A lot of books, a lot of educators say under the last pivot high, or the last pivot, over the last pivot high, or under the last pivot low.
I mean, that's the basic rule, in trading, in books or whatever, or courses, right? There's a basic for everything. This is a bull flag.
Yep.
But you gotta understand where it came from. Where is it extended? Is it in the middle of the range? Is it the right asset to trade bull flags? Because a bull flag is a continuation pattern, but it's also a momentum continuation pattern. So if the asset is not involved with momentum right now, it's not the right bull flag to trade, right? Yeah. So the same goes to stop losses and other stuff as well. Where you put your stop loss is, the basic rule is under the consolidation, under the reversal candle or whatever. If you want to take it just a little bit further, you need to understand, okay, let's say this is, I got a consolidation, right? But 20 cents below, I got another major support level. So you can either put half of your stop loss at under the consolidation and the other half below the support level, right? It's basically, you will play with it. There is no
right or
black
wrong.
or white, exactly. 1 or 0. This is trading. And so either doing that, just placing half and half, you can let it take your stop loss and enter again, as I mentioned, or don't put a stop loss in exactly. No, I'm serious about it. Just start at the beginning, just scale in with half of your position or third of your position, and that way you don't really need a stop loss because it's only third of your position, right? And if it will drop to that level of support, like where your stop loss should have been, then you can add more. So you're averaging down, putting the price just a little bit lower, but now you can put your stop loss.
But in order,
it's already checked.
Just to clarify, before people actually do what Miki says, before we do what Miki says, you got to work out the correct position size for the trade. You don't just whack in just a random number that you haven't worked out where you would get out of the trade beforehand.
Yeah,
so
of course.
Wherever your entry is going to be, take that to where you theoretically would have your stop loss, work out the position size, and then from there break it down, that position size, divide it by 3 or 4 times to have the correct position size when you're averaging in, instead of throwing just random numbers in and then averaging down with random numbers, and then you've got a position size that is just ridiculously high, and then you get stopped out and you lose your account.
Yeah, I mean, for every trade that you take, you gotta understand obviously the risk management that involved. In case you missed that episode,
definitely check that out. Yeah,
1 or 2. Yeah, so on those things, and we'll probably talk about it later on as well. But before you enter any trade, before you making any deal, before you buying any real estate, before you start going out with your girlfriend, your new girlfriend, you gotta risk management the whole situation. You gotta understand where you're cutting, right? Let's say if you're vegan and you find out she eating meat, right? This is your stop loss, right? So those kind of things.
Or you don't want to take your new girlfriend to where you used to take your old girlfriend. You never know if she's going to be there. These risk management techniques in real life, I guess.
In real life, definitely.
Yeah.
So, but yes, in all seriousness, you got to understand before you enter the position, before you enter a trade, what will be the maximum drawdown that you can handle, emotionally and financially. And then build the scale in. If you fear that, let's say, talk about the shakeout, right? If you fear there will be a shakeout, enter the bull flag with a third of your position, see the shakeout, enter with a third, another third or 2/3 and so on. So you can play with it. Trading, this is what I like about trading. You can manage it.
Yep.
You know,
it's something people definitely have to get used to, because I used to be, still am sometimes, a trader that likes to get in at one point and likes to get out at one point. And then after being around Miki and understanding that you're never going to get the best point to go in, and the best thing is to break it up. It takes a little bit of time to get used to breaking trades and laddering in and laddering out. But when I have done it, I've eventually found that it's been much more effective than just having one entry point with your full clip and then one exit point. I reckon it's much better that way.
I mean, it makes trading even easier. You know, easier. I'm, saying it cautiously.
Yeah.
But it does, because you're not in full exposure. So it's easier for you to think, to manage the trade, to control your emotions. Just get in with a tiny bit and then start building from there.
Yep, wicked. I think Oz actually made it a point to tell us that to give like a book or recommendation or something that we read. I don't know if you're reading anything at the moment that may help anybody.
I just started. I think you told me about it, Atomic Habits.
Ah, you just started Atomic Habits? Yeah, wicked book. You guys, everybody's got to start on Atomic Habits. What do you think?
I guess it just jumped. You told me that, and then I saw it in another, whatever, Facebook or whatever.
Oh, they're listening to us.
You know, exactly.
They're listening to us.
Yeah,
big
that's
time.
obvious. Come on. But
Yeah.
talking about manipulation.
It's,
But yeah, definitely.
So yeah,
sounds pretty good.
I've got one that I used to read quite a lot, and it's the magic of thinking big, or how the magic of thinking. Yeah, it's the magic to thinking big. It will probably pop up somewhere on the screen. Fantastic book, all about the kind of perspective and the way that you go about life in day to day, and the difference between having a positive perspective and the difference it can make if you have a negative perspective on a certain situation. And I think that really helps in my trading, but can help in everybody's trading, is just having a kind of particular attitude or a positive attitude to what you're doing, instead of like, sometimes if you get your stop hit or you've gone into a little bit of drawdown, very fast, if you're not careful with your attitude or careful with your how you're dealing with that, negativity can come in and say, I'm not a good trader, this is not meant for me, I should just quit. And very fast you can get yourself into a hole. And there's books and there's things that can actually help you with that. And that's the magic of thinking big. Pop it up on the screen, read that book. It would definitely help for anybody that wants to listen to it.
Yeah, thanks. I'll do that.
After you finish the Atomic Habit, are you reading it in English or Hebrew?
English, yeah.
English?
Yeah.
Psh, damn.
I'm barely reading in book.
Yeah. Fantastic, guys. So like Miki said, you can check out us all over Spotify. You've got Google Podcasts, soon YouTube. We'll put it on Apple Podcasts as well for anybody that's on iPhone. But definitely subscribe and watch all the other episodes that we've done on risk management and things like that, because there's some real good golden nuggets in there that can really help you. So
yeah.
Take care, guys, and we'll see you in the next one.
Bye, take care.